everybody, to another episode of Moving Markets Podcast. My name is Jeffrey Dunyan. I'm the owner of Safe Option Strategies. Joining me today is my co-host, Steve Tester. Steve, take 30 seconds or less and tell us everything important about yourself.
Okay, well, now you're throwing me off guard. I didn't know you were going to do
You
that.
need 30 seconds?
Yeah. Only 5. I've known Jeffrey for how long? 35
36 years, probably.
Long time. But no, we've traded options together for quite a few years now, right? 15, 16 years?
For a long time.
For a long time, yeah. So.
And Steve also has some expertise in the housing industry and the mortgage industry. So he's my go-to resource anytime I want to know why things are happening in the housing market and what effect it might have on the rest of the market. All right, so to start with today, as of today, the Dow Jones Industrial Average is actually in negative territory year to date. The S&P up less than 8% now, and the NASDAQ is still up 20% year to date, but 3 months ago, 2.5 months ago, it was up 35%. So the NASDAQ has given up, maybe not quite half, but at least 40% of its gains on the year it's given up. What are some of your thoughts on that? What do you think is the biggest driver of this current bearish trend that we're in?
Well, I'm thinking interest rates. They're sticky and they're going to be higher longer. And the market is it's in for a roller coaster until we figure that out.
Makes me wonder a little bit why. I guess maybe it's just because of the fact that it went so high in the early part of the year that the NASDAQ is still in positive territory as much as it is, because all the talk for the last several years, two years at least, where interest rates started getting jacked up to try and curb inflation. Everybody talks about how the NASDAQ stocks get most affected by that, like they take the biggest hit. But NASDAQ, if you had your portfolio in nothing but NASDAQ-based ETFs, you'd still be up 20% on the year.
Yeah.
And that's better than the long term. Isn't the long-term market average somewhere between 12 and 15% a year, like long-term?
Yeah. I'm thinking, well, you tell me what you think. If interest rates are going to be higher longer, like the Fed is saying, is that portend bad news for the NASDAQ? Are they going to drop a lot faster than the S&P and the Dow?
They certainly have for the last week and a half, 2 weeks. The drops in the NASDAQ have been more exaggerated. But like I said, they were up so kind of ridiculously high at the midway point of the year. I was thinking back to when we were getting towards the end of June, first part of July, and looking at where the NASDAQ was and thinking halfway through the year, 35%. Have you ever heard of the NASDAQ or any index performing at 70% in a single calendar year? I mean, you kind of had to know it couldn't last, but I don't know if anybody expected it to tumble and roll over and go down this far this fast.
Well, and then with the economic reports coming out tomorrow, that's going to be a telltale on what the Fed might be doing next week.
I think so. My thought, and this is not an original thought from me. I've heard this for years. When you've got something like PCE data, which comes out tomorrow morning on the 27th, a lot of people think that's the key indicator that the Fed watches. With them meeting on Tuesday and Wednesday and offering a rate decision on Wednesday, I don't think tomorrow's numbers factor into the equation for this coming report or this coming decision. I think the decision is made, and whatever numbers come out tomorrow, good or bad, will end up having an effect on the December 13th meeting.
Yeah, I mean, I'm hoping if they say they're going to raise them 1 or 2 more times, within the next, who knows, 6 months or even, well, you got 2 more times this year, right? November 1st and December.
The odds are, if you look at the Fed fund futures tool, the basically the consensus is 98+% that they won't raise rates. It's like over 98% of people think they're not going to raise rates next week, Wednesday. But the number's more like 70% that think they're not going to raise it in the December meeting. So those are the last two times this year, November 1st and December 13th. 2 months ago, 3 months ago, Powell stated pretty definitively that there was going to be probably one more rate hike this year. And so if they don't do it this coming Wednesday, it seems a foregone conclusion they would do it in December. And as much as I don't love Jerome Powell and haven't really been thrilled with him as a Fed chair or Fed Gov, no, he's the Fed chair, not a Fed Gov. As much as I haven't liked him, I got to give him credit. The guy has been, I'll give him credit for this. He's been consistent and he stayed on message for the last 18 plus months. After that year that he spent spewing out that transitory inflation nonsense, that you could tell every time he said it, he didn't believe it. I mean, that was, he was just sharing the political line, reading the memo coming from the White House and regurgitating it. But since he got off that transitory mantra, he has not only stayed consistent, but he's telegraphed everything that he's going to do and followed through on it. So, he said a couple months ago he's going to, probably one more rate hike. It makes me wonder, why does anybody think that there won't be one in December if he stays paused next week?
Yeah. And with the data that's coming out, it seems like they said, inflation is sticky. So they're going to, the 10-year yield is bumping up against 5 and drops just below. Kind of hits there at 5, comes just below. Yeah. So I'm thinking, one more economic, some data that comes out that sends that yield up above 5%, and then that 5% then instead of a ceiling is a floor, then they're going to, they have no choice. They're going to have to raise another quarter point.
And a high PCE number tomorrow, the personal consumption and expenditures. I think the number that they're looking for, like analyst estimates, have it at 3.7% year over year, and 3.9 if you, I might be off on that, but I think they have it at 3.7 is the expectation. And that would be down a tiny tick from last month. Last month, the number came in at 3.9. I don't think it's going to back off. I think it'll be 3.9 or 4.0. I think there's going to be a rough surprise, maybe not an increase from last month's number, but I don't think it's going to drop from last month's number. And that, I think, will spook the markets, cause that 10-year yield to go up above 5. And I think today's sell-off will look small compared to what happens tomorrow. Now, if I'm wrong, it comes in at 3.7, right? Like right on the expectation, or maybe somehow, some way they surprise and it comes in at 3.6. Then you could see a rally tomorrow. I think there's a lot of money on the sidelines that wants to rally going into the holiday season, but it's not going to take much to tip it the other direction.
Yeah.
So it's, do you remember the days that this would go back to probably our earliest days of trading, like maybe late 90s, early 2000s, when what the Fed did or didn't do on any given meeting didn't have a major impact on the stock market. The market moved up if earnings were good. It moved down if earnings were bad. If there was good economic data, the markets would rally. If there was bad economic data, they would go down. And then I remember when all of that changed, when the Fed's policy changed and they started printing money like crazy, all the quantitative easing, the messing around, artificially deflating interest. Well, it's not artificial. It actually happened, but deflating interest rates to ridiculously low numbers. And then you've had all this time since where good news is bad for the market and bad news is good for the market.
Like a strong economy now, you don't want that because, God, people have jobs.
A strong economic report, that's a heating economy. That means higher interest rates and the markets go down. You get some really bad news, like if unemployment numbers would have been skyrocket high today, you would have seen a market rally today, because people would have looked at that and said, that what the Fed's doing is tamping down the job market. That's going to, squash demand a little bit. Supply catches up. You come out of inflation. But it's, it's just not what's happening. Good news is bad, and bad news is good.
Yeah.
So crazy stuff. What's your prediction? If you had to predict, we won't hold you to this in any way. If you had to predict, do you think there's a little bit of a Christmas rally in store, or do you think we continue to sell off going into the last part of the year, these last couple of months?
I don't know. I maybe just sideways to selling off. I don't really see much of a rally. I mean, maybe it's sold off quite a bit here in the last week and a half. But I think it was sideways to bearish. I wouldn't be plowing much money into stocks. If you've got stocks right now, you probably want to be putting some collars on. So if not already, because
I heard a couple different people this morning as I was watching some of the financial news programs in my office this morning. Couple of people, what I can't remember the guy's name, and I wish I could, because I'd like to give him credit for being the idiot that he was this morning. He basically said every 18 months or so the market corrects 10%. It's done that now. That's what's happened over these last 2 months. Everything is good. Everything is going to go back up. We're going to finish the year on a strong note. And I'm listening to him and I'm thinking, look, I could be wrong and he could be right, but I'm thinking, what world are you living in? What is going to change? What is going to change fundamentally in the economy that's going to drive things up in the next 2 months? Barring Jerome Powell coming out next week when he speaks on Wednesday and saying, we've done everything we can. We're not going to raise rates ever again. For the rest of existence, we're never going to raise rates again. And we'll start bringing them down the second we see a little bit of inflation relief. I mean, that could rally the markets, but what are the chances Powell would say something like that?
Yeah.
I mean, that would be stupid, right?
But yeah, zero.
But you don't see, I mean, nothing is going to change in terms of government policy over the next 12 months. Nothing is going to change in terms, nothing is going to get better in terms of those underlying economic fundamentals. It's not like at the beginning of next week, Biden is going to come out and say, everything I did on energy policy my first day in office was wrong. We're going to roll it all. We're going to roll all the regulations back. We're going to frack and drill out of our freaking minds because Trump was right. I mean, that's not going to happen come Monday morning, right? And if anybody in the administration thought it was going to happen, they just wouldn't let Joe get out of bed that morning. I mean, barring some massive policy change, like literally a reverse in policy direction, barring something like that, how are things economically going to get better? So I hear these people say, "Oh, we've had our 10% correction now. Everything will be rosy from here out."
Well,
it makes me wonder if they say that for the sake of their clients.
Earnings are showing differently, right? They're all kind of tampering down in the earnings, and
they're beating really super lowered expectations. They're companies are beating expectations to the tune. I heard yesterday on Maria Bartiromo's show in the morning on Fox Business News, 80% of the companies that have reported so far have beat expectations, but expectations have been so ridiculously lowered.
Yeah, the bar is set very low. But
it's like if you were going to compete in the high jump contest, but they dropped the bar down to 2 feet so everybody could step over it. It's like, woohoo, give everybody a medal because they knew how to step over a 2-foot bar.
Yeah.
But what's I think caused some of these companies to sell off is they're having a hard time spinning anything positive on guidance. They're some of these CEOs and CFOs are coming out on these conference calls and being honest about guidance, and it's not looking good. That's what happened to Meta. Meta did not miss on their numbers, but they were down heavy this morning and all throughout the day because they can't truthfully guide well for into next quarter and next
Well,
year.
yeah, so, yeah. Their guidance over the next quarter, next 6 months, year, everyone's really lowering the bar, and that's what you're seeing in the stock price.
Yeah. Well, it's going to be interesting. I'll admit fully, I may be the one that's wrong. Maybe there is a little bit of a Christmas rally. Maybe a 10% correction is where the bargain shoppers are looking for things to be and are going to start pushing things up from here. I'm not holding my breath
No,
for it. I'm not
no,
betting that way.
no. At best it's just kind of trends sideways, but I really think it's gonna
If
go
you
down
look
in
if you look at a
the rest of the
stock
year.
chart, if you look at a chart of any of the three big indexes, I'm not counting the Russell because it can sometimes be a little bit of an outlier. But if you look at the S&P, the Dow, the Nasdaq, over since the end of July, all of those indexes have been channeling down where there's a little bump and a little bit of rally, but then the next drop is lower than the one before. Then a little bit of a bump back up, then the next drop is lower than the one
Yeah.
before.
Lower
I kind of
highs,
think
lower
I,
lows.
I kind of think that pattern's going to continue. I think any sideways movement is going to be short lived, and then there's going to be that next leg down that takes you a
Yeah,
little bit lower than the one before. That
yeah,
that's kind of what I think is going to happen. I think we're just going to get the pattern that you look at since the end of July till now. I think that exact same pattern stays until the end of the year.
yeah. Which means that
And
we might have another little bit of a rally, you know, uh, you know, uh, on the Nasdaq, what to 13,000. I don't know. I'm looking at
and
here, and then it just drop again. Lower highs, lower lows,
and even
lower
though
high, lower.
even though it's expected, I think a pause in rate hikes by Jerome Powell next week, even though that's what most people are expecting, will still give a little bit of confidence to the market and give it that next little bump. I think it'll be
Yeah,
short lived, and then I think we'll come back down. But then there's the one big X factor. This is probably the last thing we have time to talk about. The one big X factor. If and I don't know, this could go either way. If Iran becomes more aggressive over in the Middle East, I mean, right now they're doing everything through their proxies. They're doing things through Hamas. They're doing things through Hezbollah, whatever the Houthis in Yemen or whoever they are. I never loved their music anyway. So Houthi and the Blowfish over there now they're terrorists. But if Iran gets more directly involved, kind of comes out from behind the curtain where they're pulling the strings right now, and gets more assertive and more directly involved, I don't know how that does not pull the U.S. more directly into things, meaning boots on the ground, Tomahawk missiles flying towards cities in Iran and military targets in Iran. And if all that happens, I think you're going to see oil spike, and that's going to crush the market. So whatever else might be going on economically in our country, if you throw in the stuff that's going on with the Middle East, if Iran backs off a little bit, if Israel goes in and cleans out Gaza, and there's not a lot of involvement by other countries as they do that, then this could be one of those things that's over in another few weeks. From maybe not over, but people will start losing interest because it doesn't look like they're going to get dragged in.
yeah,
And if that happens, the markets might stabilize, and then maybe something like that combined with Powell making some positive comments about what the Fed's been doing, that could give you. That's the one place where I could see the Christmas rally come. I think it's more likely the first scenario that Iran kind of comes out of the shadows and gets a little more directly involved, and it's gonna force the U.S. in.
yeah. And then a lot of volatility on the markets.
Yeah.
Yep.
World War III, man. It's you hate to think of that possibility, but it's hard not to see it as at least a possibility, and maybe edging closer to a probability. So we'll see. We'll see. I hope I'm wrong on that part. All that
Yeah,
last part, I hope I'm wrong on. But we'll see what
everybody
happens.
does it. Exactly.
All
Okay.
right. Any last thoughts before we wrap up? I think we covered
Yeah.
plenty today.
Yep. Covered it all.
All right, we'll see what the PCE numbers are tomorrow. We'll see what the Fed does on Wednesday, and we'll be back towards the end of next week for another episode.
Make your adjustments after the market opens.
Absolutely. Okay, we'll see you.
Okay.